Hey guys, welcome to another episode of 21st Capital. Today we are going to have another exciting chat with Crypto Wizard from Glassnode about Bitcoin data and what's going on. Today is February 21st, 2025. Price of Bitcoin is below 95, just dipped below 95. Markets are not having a great time. Also, traditional markets are down. Dow, Nasdaq, S&P 500, they're all down, actually pretty big. Dow had its biggest drop in 2025. Some nervousness because of global affairs. There is word about another COVID virus found in China. People are just traumatized a little bit by that, and we also have macro pressures that are caused by untamable inflation, increase in inflation. It's not coming down as fast as some people expected. So the rate cut expectations have been shattered a little bit. Plus, Trump's tariff war is likely to also be inflation positive. So all this is keeping investors on edge. Plus, we have a bunch of negative news in Bitcoin. We had a massive hack. Well, in crypto, I should say. We had one of the largest hacks in history reported today. We will talk about that as well. And that could put negative pressure on the market as well. But Bitcoin is down both because TradFi markets are crashing, and then we also have some negative news today from the hack of Bybit. How are you doing, Wizard?
I'm doing good. Can you hear me?
Yes, very well.
Okay, yeah, I'm doing good. I got a little bit flu, but I'm excited. Let's see what happens. Corn
No,
is getting cheap, so you should get some money and deploy into market.
yeah, get well soon. Um, I know that you published a really interesting report for Glassnode just lately as part of your weekly reports. This one dives into what's going on in the market and liquidity cycle and the status of derivatives. We will review that. But before that, let's just take a couple look at some of the charts that I find interesting right now, and then we'll go over Wizard's report in depth. First of all, the big news of today is the hack of Bybit. These guys were hacked in a very interesting. Let me find a. Yeah, this is a really good report about what happened. 1.4 more. Yeah, 1.46 billion was stolen from Bybit. This is, I think, 1/25th of the whole assets at Bybit. So 4% of the whole exchange is gone. One of the biggest, it's the largest crypto theft in history. So we are watching history unfold. And if you combine all the prior hacks so far, this is as much as 16% of that figure. So basically what happened was they didn't break the code or they didn't hack anything. They just tricked all parties in a multi-sig to approve a transaction, which was very similar to the real transaction, but it was a fake one that was changing the smart contract instead of doing the regular consolidation that the exchange was expecting. So everyone was expecting, at this time of month, we are consolidating, we are moving some coins from one address to the other, but the hacker managed to convince all of them to sign a different transaction involving the same addresses and same accounts, which was changing the smart contract logic and ended up in a lot of money lost. So let's see. Let's see if there are any other interesting facts we want to cover. Of course, there is now fear about whether the exchange is going to be able to recover from this, and do whether they have enough funds. Of course, they say we have enough funds, but people are not believing them, so they are withdrawing a lot of money from Bybit. But here's Ben talking about.
I think it's not really loud,
You can't hear it, right?
Yeah, not much.
It's probably some feature that's preventing. Basically, he's saying, yeah, even if we are going to be able to cover all the withdrawals, even if we have a bank run. They are having a bank run, and they say we can cover. But if they can't, they will always say we can, because they've learned the lesson. And the moment you say there isn't enough, the problem just gets 10 times worse. So no one knows, actually. This is also a good reminder that concentration of custody is always a problem, and these things are honeypots for hackers. But this hack was very unique because this guy didn't really break any code. He just tricked everyone in a multi-sig setup, which I had never heard of something like this. So this is kind of a new frontier, new era for these hackers. What do you think? What do you think about all of this?
Well, first of all, I mean, it is really sad for people who actually saved a little bit of money, just put on exchange. All of a sudden, like, you cannot. I think they still let people. I don't know. It's only about Ethereum, I guess. And if they have other assets, I didn't see any evidence that people have issue with, like, for example, extracting their Bitcoin. But Ethereum, I saw even the CEO was talking about it's taking some time. But when you look at the reserve on exchange, it's actually not. It's drained. So first of all, I'm really sad for people who are possibly gonna, like, face the consequences. Hopefully, they find a way to just pay people's money. The other thing is, it was the timing, like, because when you look at the pair of BTC, alts were bleeding, and I'm gonna show in the report that the liquidity was leaving the market already, and I was hoping to get some bounce back for people who just invest a lot in these shit coins to get some time, I mean, breathing interval to just cash out. But look what happens, because it's not only affecting Ethereum. Go look at the other alts; they're all bleeding even more because I think I'm not sure what's the mechanism there. It could be panic selling, first of all. Second of all, people who want to provide some liquidity, I mean, the exchange, including the exchange, probably have to sell some assets to be able to make some these withdrawals, pay people's money back. So I'm not really aware of the mechanics, but it's been actually a really bad time to see this sell pressure.
Yeah, and then it's not helping Ethereum. It's been losing liquidity, leaking liquidity. A lot more people were expecting an alt season, which will finally allow ETH and other alts to, spike and follow Bitcoin after Bitcoin has gone up so much. But Solana essentially stole funders from Ethereum, and Ethereum has not been doing great. I think starting like in the last 2 years, it's been underperforming Bitcoin by quite a bit. And this is where people were talking about flippening and so on. And in fact, ETH BTC, the pair topped exactly when the calls for flippening top. When you look at Google Trends, you just search for the term flippening. When it peaks, that's the peak of the ETH BTC pair, and it's underperforming, and it's very concerning. And for ETH holders, of course, we have been very clear ever since, even like back then when Ethereum was growing much faster than Bitcoin. Our thesis has always been that ETH has difficulty keeping liquidity in because it's competing on utility. It's compromising on decentralization to make more utility, make more flexibility, right? And then there's nothing stopping another chain to become even more centralized and even faster and easier to use. And that game never ends until you get to the end of spectrum, which is existing TradFile, like a centralized database on a company's servers that's running everything. So right now, Solana is actually doing this exact same thing. It has compromised even more on decentralization, and it has gained a lot in the way of fast transactions and low cost, which is now stealing a lot of those meme coin trading fees from Ethereum. And there will be a couple years later, there will be another one that steals that advantage from Solana.
Maybe faster, Sina, like precisely. There was utility versus just being speculative platform. That was the debate. Like the claim was, okay, we have some utility and Bitcoin maximalists, those damn toxic maximalists, right? They were saying, hey guys, it's just all a speculation and there's no value proposition. But like you said, in the merge era, people were calling about Philippining, but they were forgetting if you want to absorb capital, just buy narrative. Like you said, they're going to be some other better storyteller with a better narrative, cheaper, that are going to steal the game from you. And that happened with Solana. And I believe the next, I don't want to like predict, I feel the next one who is going to win Solana, they might not even have a token. They don't need the token. Why you tokenize it? Probably is going to be a cheaper, one of these L2s would be the cheaper platform that you can do whatever you were doing with Solana, but no token, even cheaper, but centralized. We are literally going back to the fiat system, but in a semi-unregulated fashion that you can do actually bet on everything. That's the story. And now clouds are just going away and people see what was the real value proposition here. A system that you can have a hard cap, can save your value there, and do not get into the game of, oh, buy this 100x. That was just one cycle. And people who were developing frameworks like, oh, BTC dominance going to 60% dropping means altcoin, alt season, or I don't know, ETH BTC reaching that resistant level or that support level, that means we're going to bounce back. All of those rules or influencers, the gurus who were developing all these mental models were based on two bull markets. That's it. They had two data points and they thought it's going to be happening every single cycle. 2017, 2020, it was the ICO. Crypto was a new thing. A lot of people came into the game and that was causing a lot of speculation. Money was coming in. Then we have 2020. It was the COVID time. They were expecting to see the same thing. And look, surprise, it didn't happen. Who is going to buy the bag of shitcoins you were holding from 2020? Why would they? Like, why would I go get a shitcoin that is 3 years? I want to buy the new shitcoin. And guess what? It's 11 million shitcoins now in the market. It was around 10,000 something coin market cap. I remember it was 10 to 12,000. Right now is 11 million crypto. And good luck finding the one that is going to pump, because you're not the founder. You have to be a friend of founder to just get some liquidity and dump it on people.
It's shitcoins on steroids, and for a while they would pretend that we have a new coin that does something fantastic. They would play with it for a while, a couple years, and then all the insiders would get early allocations, and they would pretend that it's about the tech. But meme coins came along, and they're not pretending. They only say that we are absolutely about the gamble. We have nothing else, absolutely nothing else. It's just a meme. And they're doing great, and the market is rewarding them, and liquidity is going out of the other big altcoins. And in fact, if you wanted to be a prudent altcoiner, you would have invested your money in Ethereum and ADA and Link and other big ones, right? Because they are the safest. But in fact, in this industry, things are the other way, right? The safer ones are the worst performing, because it's not about a fundamental value that's any of them is pretending to offer. It's mostly about novelty and the pump and dump. So people are kind of grasping reality now. Oldest, biggest chains are not exciting anymore. The meme value is gone. Now there are new memes. When you can, 1,000x your money in a few hours, who cares about long-term performance of, Ethereum or other coins? So that case has weakened a lot. And for example, if you look at ETH BTC pair, when you buy ETH, your risk is much higher, right? You have less decentralization. You're relying on Vitalik et al. And the team to do a great job, and you're relying on all those experimentation to perform. So your risks are higher. If you even just keep up with Bitcoin, that's not great, right? You should be rewarded more for your risk, but in fact, it's the other way. You're actually losing. ETH BTC pair is now back to levels you could have seen in 2021 just for a moment. And then a brief moment, COVID period, before and after COVID. And then the next time you can find similar valuation, it was in the early days of ETH. In other words, most people, except like the very early adopters, most people that have bought Ethereum after March 2017, they now have less Bitcoin. So you took all this risk, you read all that white papers, you followed every single one of those thousands of ideas that Ethereum team has put forward, all those merges, splurge and upgrade and hard fork and all those activities. You followed every one of them. You went to the conferences, spent a lot of time, and you underperformed Bitcoin. You could have just bought Bitcoin and held. Now, you might think another meme coin is going to be outperforming Bitcoin. Of course, 1 out of million, 1 out of 1,000, every once in a while they outperform. But you're competing with people who have a lot more knowledge than you. You're competing with the internal team that have already planned and they already have pre-allocation and they're already there to dump on you the moment you purchase. And then they will cash out and buy Bitcoin with it. So if you just hold Bitcoin, all that shenanigans that are happening elsewhere ultimately will come back to Bitcoin. You just miss the pump and dump, which you didn't have much chance to succeed in anyways. So that's the game. It's all about pump and dump. Now let's look at what's going on in the Bitcoin.
Yeah, let's do it.
Yeah, so I have a couple charts, but
Sure.
I'll let you take the steering wheel. A couple things. First, I'm really interested in what's going on in this sideways price action. Right, my theory was that a while back I put out a tweet and I said sideways price action is absolutely necessary and expected. Why? Because if you look at this black line, that's the price of Bitcoin. We went from here, like from October 10th of 2024 to say December 2024. So in 2 months, basically. In 2 months, maybe September. So in 3 months, we went from 56 to 106. So an asset that has doubled in 3 months needs some time to relax, right? Why? Mechanically, and you see that pattern a lot, but why is that happening? When price really goes up, a lot of people that have been holding the money at low prices, they are now in an insane amount of profit. Next thing they do is they get worried, like especially if they are not really long-term thinkers, they would get worried. Okay, I have some money on the table, and I think it's a really good profit, so I'll take some profit, and I take some money off the table. So some of these people would be motivated to sell Bitcoin once it goes up a lot. Now, this graph that I have here, Nupal, net unrealized profit and loss, and I've specifically looked at short-term holders. And you can see once the price went from 56 to wherever, like this one, 97, the Nupal chart shows massive amount of unrealized gains, essentially unrealized gains in this orange color here. It peaked at a value of 0.20. And that basically means a lot of people are in a lot of profit. And these are all short-term holders, more likely to sell. When these people see the profit, they begin to take profit. So over time, as we have entered this sideways price action, you see the unrealized profits are going down. So essentially, there is less and less money in the pocket of short-term holders. And as you can imagine, when that happens, the realized profit also go down. So as you can see again, as soon as we hit 100K on the hourly, so this is daily, so you don't see it. But during the day, we hit 100K, and a lot of people started realizing profit, actually selling their coins. So you see a lot of profit taking here, and then less here, less here, less here. So as time has gone by, and the price actually hasn't really changed in the past few months, but profit taking is almost ready to stop. So this is the positive side, but there's also a negative side that's happening. I really like this to go further down and people fully capitulate and actually start selling at a loss. This is exactly what happened in the prior period when we had like 7 months of consolidation. And actually it was a slow bleed, right? But more or less in the same range after ETFs pushed us to the all-time high. So we actually we had a lot of profit taking. Profit taking went down and then spiked a little bit, went down again. And at some point, people were selling a lot of coins at a loss. And then some more here, and this marked the bottom. So when people actually give it up and start realizing losses, that's where it's very likely for the price to bounce back. So let's see how this goes, but profit takers are getting exhausted. Let's see a couple of things I would want to mention. Yeah, just kind of confirming all this trend. Here I have the realized price by 8. Essentially, this tells you what is the price at which people bought their coins, and it breaks it down by different categories. People who bought in the last 24 hours, or people who bought in the last week or last month, last 3 months. Now, important thing on this chart is price has dipped just a little bit, but that caused the first 4 categories, the 24, the 1 week, the 1 month, and 1 to 3 months. All these 4 categories are now on average in loss. So price is below their realized price. And that's a great sign. So you would see minimal sell pressure from these guys for now. And then the other category to begin experiencing that is the 3 to 6 month group. These guys are still in profit on average. Their purchase price is their cost basis is 73,000. So they are still in a lot of profit, but the profit is shrinking. As you can see, that gap between the price and their realized price is going down. All of this is positive, and over time you expect this to happen. People give up all the gains because they trade, and on average the market resets once we get a massive jump in price. You just need time for the market to absorb all that new money. Anyways, this is the positive part. I leave the negative part to to Wizard. Over to you, sir.
Yeah, that's gonna raise a lot of questions, but I gotta just cover the Beacon chain with you a couple of days ago, and I gotta say, when we were writing this, we were not like aware of anything that's gonna happen about Bybit. So I'm not claiming that by this report I knew Bybit is gonna have that incident. Not at all. We were trying to just show how most of the indicators are showing the liquidity at least getting a slowdown, and depends what asset we're talking about. Is it Bitcoin or is it Solana or meme? So I thought maybe we put together some charts to answer this question: is liquidity? Because I agree with the sentence that say liquidity is everything. I mean, when liquidity is coming in, when the risk is on, you could see, okay, most of assets are performing, especially Bitcoin and I mean shitcoins also. I don't know if it's going to be the case in future, but it's been just the case so far. And liquidity, following liquidity, is going to give you some edge about predicting or seeing what's going to be next. So in that report, what we try to do is, I'll show the live version of the chart as well. We start to show, pick some assets, and I'll just justify why we chose. How is the numbers? Is it clear, Sina?
Yes.
Okay.
Yeah. Everything is kind of legible. Pretty
Okay.
good.
Okay. So here we are seeing, we selected a bunch of assets, and why? Because they were top assets: Bitcoin, Ethereum, Solana, and also we made an index, top meme index. Literally, we chose the like Trump coin, Pepe, Shiba, and like whatever we have in top 100 coin market cap list of assets. We took the whatever is in top 100, and we averaged them by market cap and made an index to represent the meme coin sector. Mostly Solana memes because they were outperforming, but also Pepe was included here because that meme coin came into market this cycle as well. This chart is showing the monthly price performance, how they perform in last 30 days. As you can see, since early 2023, when the meme coins were getting traction thanks to Solana, you could see in short period of time, the red one, which is the meme coin, was outperforming all other assets. And that was like evident. You could see when meme coins were rallying, you could see all of them are like 20x, 50x. So you could see price wise, they were like doing really great, but all of it was abrupt rallies. Like it was not as sustainable. But when you look at Bitcoin, most of the time it's positive. Solana was the second one, and we have like really nice performance, monthly performance when market was rallying. But when we look at the recent couple of weeks, especially after the peak we had in late December, the rate or the momentum of price became super negative for memes. Like faster you go up, faster you're gonna drop. Like the sharper the rally is gonna be, the sharper the price is gonna decline in a downward market. As you can see, 18 like 2 or 3 days ago, the rate or the momentum of price for BTC dropped from whatever it was. I think back in December was 48% per month to minus almost 6%. Ethereum had a good month in December. Sadly, it didn't, persist, and you can see it drop to 16%, minus 60%. But meme coin, it was plus 90%, dropped to minus 37. So that means how fast the momentum shifted for the meme coins. And why meme coins? We chose meme coin because that they were actually the main sector, based on Google search, based on your Twitter feed. If you were looking around, everyone were talking about memes. So you could see meme coins were dropping sharper, and you could see the pain in the Twitter right now. Even now, after Bybit price is 95, it's what I don't know what's the percentage drawdown from the all-time high, but the pain you see in timeline, the pain you see in the post, your friends talking about market is done, is bloody, is like a post FTX. So you could see the Bitcoin not drop much, but because most of people were investing in risky assets, especially memes, now they're paying the price, and the pain is double because
And it's very important. Like throughout this cycle, we've seen this pattern where Bitcoin goes up, some things go up with it, and then Bitcoin goes down just a little bit, and those other coins give up a lot of those gains. So
exactly.
they don't go up as much with Bitcoin, but then they drop with Bitcoin and a lot more.
Yeah. And I'm gonna say why this situation is worse and more painful than post FTX, because when the FTX happened, Bitcoin was dropping as well. So you as a shitcoin investor, you would just say, okay, hey, Bitcoin dropped as well, even though it was not fair because Bitcoin was 80%, but some of them were 99 something. It's just crazy. They were not listed on some exchanges after FTX. But right now, Bitcoin just dropped 10 to 15%, and your shitcoin dropped 90%. Your Trump coin dropped 85%. So that's double pain. That is what I understand. And I gotta say, those damn toxic maximalists told you so. And I'm not happy to say it, but you gotta say it. They were right, including myself,
I
actually.
want to buy one of those mugs that say "I told you so."
Yeah, we should. We
I'm
should
gonna have
actually.
it on the show.
So, speaking of price is not everything, and I think we talked about it. You cannot use market cap or change in market cap as an indicator to show how much capital came into an asset, because they literally pick a portion of that supply, trade that portion, and multiple the price to the full supply, and that's why the numbers in coin market caps are not really representing the capital inflow outflow. So what we can use is the on-chain metrics, and the most famous one is realized cap, which is literally an estimation of the real capital deployed to an asset. So looking at the change in the realized cap or total money, real money, I'll have to simplify, total capital locked in different assets, top assets, and compare it with the early 2023 when these new meme coins were popping out, including Bonk or Floki. I don't know. The names are like really hard to remember, but from that era, compared to that era, you could see Solana got 18.8 times bigger in terms of the real money. So Solana was the absolute winner in terms of absorbing the new capital. It could be mostly retail. We can speculate about that, but it's not a bad statement to say, yeah, retail chose Solana. When you look at Ethereum, it's really sad. Like even meme coins could absorb relatively more capital compared to Ethereum, and that was like really obvious. And that outperformance in terms of absorbing new capital continued all the way to July, and we had some outperformance in terms of absorbing new capital in late December. But unfortunately, after December, you could see Bitcoin was resilient. It was around 3.1 to 3.7 times bigger than what it was in 2023, but it remained in the same range. That was the behavior from Bitcoin we saw after post election. Solana dropped drastically from 18.8 to 7.6 times. Still is elevated. It's still a lot of capital in Solana, but you could see how sharp is the downward trend. You could see the capital left Solana, but meme coin was divorced. You could see from 5.2 times bigger than what they were, or around here they were around 6 times, 7 times, all the way to 1.1. So literally, in terms of capital that was locked in these altcoin, meme coins specifically, top meme coins, including Trump, Bonk, Floki, Pepe, and I forgot the other one. So you can see the amount of capital that was in the meme coins is almost the same level that it was in April 2023. So it came in so fast and it was extracted so fast, and now we're back all the way to 2020. But Bitcoin, it was consistent and persistent. Solana had outperformed really, really better than other asset in terms of absorbing new capital, but the downward pressure is pretty scary. Ethereum literally didn't do much. Like it's just remaining the same level.
And I was just looking at Solana's history as well. It seems like it hasn't even had a ATH, and even after all this winning, you can look at the Solana Bitcoin pair, and it's very, very weak. First of all, it hasn't even reached the all-time high versus Bitcoin, and right now, let me show you the chart actually,
sure.
explaining. So this is Solana Bitcoin, and this is the peak that it had in 2022, right? This is where the alt season actually happened, and then it got crushed. Essentially, it got crushed, And all the massive gain that Solana has had is only kind of recovering some of that crash, and now it's back to the levels you'd see in 2023. So essentially, all the gain versus Bitcoin that happened in 2024 is gone, and we're back in the to December 23. So yeah, it's not even when you look at the history, it's not even impressive when you look at the best of them.
Yeah, and what is really scary is when you look at the current Sol BTC chart, it is very similar qualitatively to what was Ethereum at around merge era. It was an attempt to have an all-time high, but it failed, and it was close to the peak. Now we are leaving the same in Solana. I'm not implying we're going to 100% see what happened to Ethereum, but I don't see why not. Literally, I cannot make any argument about, okay, no, this specific dimension of Solana is going to cause it don't go all the way down to what Ethereum is now. So
And also
let's see.
notice, like the gain isn't coming from like economically value adding thing
Yeah.
that's happening on the chain. It's mostly memes, and memes are gonna kill each other because there's just limited liquidity and unlimited memes. So this winning card in the hand of Solana is very temporary.
Yeah, and like they call it fragmentation. Like the capital came in, people were expecting alt season, but their definition of alt season was my bag outperform Bitcoin. But surprise, surprise, the alt season was here. If you're changing your definition to alt season is when a lot of money go to something that is not Bitcoin. Yeah, it happened. It was really strong, but it chose a different casino. It was not your casino. So the chips, yeah, I mean those tiny little chips you had from Ethereum casino, it didn't worth nothing in the new casino. And this chart actually prove your point. This is a like a first derivation. I mean, yeah, first derivative of this chart literally show the rate of capital inflow to all those assets that we were talking about. As you can see, for meme coins, when they had a rally, look how fast money was flowing into. Like it was really fast, faster than even Solana, super fast. But the same
What time is
slope
that?
that huh?
This is early 2024. What's
Oh, sorry. Yeah, early 2024.
okay?
So every time we had like a little bit rally in the market, meme coins were getting bigger faster than the other assets. That's how fast. But at the same time, they were losing the momentum much faster when they were like experiencing the capital outflow. So that shows the fact that the meme coins were a vehicle for someone to absorb the capital and rock that pool so hard that it literally is just like a heart pulse chart. You can see the money coming in, just
Yeah.
taken off the table.
I mean, that's
And
the game. I mean, there's nothing else. It's just a game of buy this. If you can dump it before I dump on you, you make money. Otherwise, I make money. So the ultimate game is to dump, right? No one's gonna hold these memes for long term, right? So every single dollar that's in them is coming out, and some of it will go to Bitcoin, some of it become dollars.
yeah, it's really interesting. And looking at 18th of February, like I said before, all this Bybit happened, the rate of capital inflow for Bitcoin was still positive. And even though Solana was actually absorbing the capital faster, relatively faster than Bitcoin, Solana dropped below Bitcoin. It is like really a sign that not much happened this cycle. But whenever it happened, we were actually showing because Solana is the tip of the ice. Like the capital is going to leave the riskier asset first. So you could see Solana is experiencing a negative, lower than Bitcoin. Ethereum and meme coins actually became negative even before the Bybit incident. So you could see the capital was leaving actually starting mid-January from Bitcoin, Solana, and meme. Riskier the asset, faster and sharper the decline was. And that was why we call this report falling uh, tides, because you could see the capital is leaving the market. Bitcoin is still resilient. You could see it's still positive, It definitely dropped from the peak in the late
So Bitcoin is absorbing less capital, but is still positive.
positive. Yes. Solana the same, but the rate that Solana is dropping, I bet you if look at today, let me look at today's data. Actually, it's 2 days after. Let's see how is the numbers now. So yeah, Solana is dropped to uh, 2.9. I think we should wait another day. So let's say 7 days. Okay, Solana is 1.1 from 2 whatever it was. So it's still positive, but it dropped 1.9%. So because Solana was what 2.5, right now is 1.1. Bitcoin is still positive, plus 3%. So you could see how resilient Bitcoin is. Ethereum is still more negative, and meme coins is more negative as well. So you could see the riskier the assets they were, they're experiencing faster capital outflow. I'm not saying Bitcoin is not going to be negative in very. I mean, I think back. I can go back to FTX actually. See, in like FTX era, it became negative up to minus 4 or 5%. But look at Solana, look at Ethereum, 0.19, minus 19. So Bitcoin is really resilient in terms of capital outflow, and that's what is different for Bitcoin and other assets. When the market is in bear market, you could see the actual capital leaving the market for Bitcoin is very small compared to other assets.
So
And
are you telling me that Bitcoin is outperforming the other assets with less risk? So you have lower risk and higher performance.
yeah, I don't know how better you can show this. So I put out a tweet actually to break down this and show it better. This is showing the drawdown in the realized cap or the capital locked in different assets compared to all-time high, recent all-time high they had, which was in December. You could see Bitcoin is zero, so Bitcoin is still percentage-wise. If you round it to 2 digits, it's 0% drop. It was at 18th of February. Look at Solana. Solana was around 8%. Look at Bonk, another meme coin. It was the same, around 8%. Trump coin was 30.
Literally the first time I hear that bonk thing.
Yeah, it's just crazy.
On our show.
Yeah. Trump is around 34% drawdown in capital. Like, I like the audiences to understand 34% of the real money locked in that asset was taken off the table in less than a month. Like,
and just I want to emphasize, this is not just price dropping. This is real capital, actually
exactly.
real dollars extracted from the system.
Yeah, people are interested. You can go. I retweeted on my page. It's from Glassnode, but yeah, we're showing how much money, how big is that money leaving these assets. So all of these metrics were pointing out, hey, there is some weakness in the market, and capital, which is the driver of the price, is leaving the market. And now the Bybit happened. I want to just show some Bybit chart actually, because a lot of people are concerned what happened. First of all, just look at the reserve. The Bybit reserve of balance. Bybit balance, it's just crazy. So for whole, I don't know how many years, like let's say how much data. We have all the way data back to 2021. So the lowest we had, it was in December 2022, like when I think market was in bear market. It was around 135, and it took the market to drop to that level all the way like 1.5 year. Like you could see, it was bear market for some reason. Ethereum was leaving the. I'm not saying it was just bought from Bybit and just extracted. It could be any reason, but it took around 1 year to get to that level. But in less than 1 hour, it's just so massive. In less than an hour, you could see 439,000, 440,000 Bitcoin drop to 23,000 Bitcoin. That is
How is
crazy,
that
right?
possible? Like, is it depleted?
No, it's the hack. We're tracking the wallets. One of the wallets got hacked, so around 400,000 something Bitcoin just went off the.
But they said they have a lot more coins elsewhere. How's that not showing on this chart as
This is just Ethereum. This is just showing Ethereum, specifically Ethereum for Bybit, and you could see drop. And after that news broke out, you could see the outflow for Ethereum skyrocketed. These are like per hour. If I put it in the minutes, like almost a block time, getting closer to block time. Look at the last 2 weeks.
Yeah, people
This is
taking
the
their
spot.
money.
Yeah, people are panicking. They're extracting, and yeah, they're extracting Ethereum. And that big spike is the hacker. You could see there was around 400,000 in one block, or I don't know, 1 or 2 block taken off the exchange. And right now you could see there's not much Ethereum after to be extracted. That's why you see no peak. No jump in the Ethereum outflow from Bybit. And we have to see what happens. The interesting thing that was happening since then is the transfer between exchanges, and it's skyrocketing. I think I have to, because in Glassnode we can break down and see how much is it going to Bybit. I have to talk to our data scientists, but you could see those rumors about getting a loan or Binance deploying some asset. It's true. It seems like they're moving asset, but it's just I think the peak is 50,000. It could be a lot of other people sending from another exchange to another exchange, but there is a high possibility most of this 53,000 is other exchanges deploying some money to provide some liquidity. Probably, it seems like that's the case, but we will have more answer next week when we get the breakdown, because it could be between any exchange to another exchange, but we can narrow down to Bybit. But looks like yes, there is some big movement between exchanges, and we will have a clear answer. So that was the effect. Just look at the perpetual market. That was the interesting thing. The fact that Ethereum actually start to show some weakness after this news and possibly this sell-off. Look at the all exchanges Bitcoin balance, like people panicking. And let me point out, after the news was broke out, the Bitcoin, you could see that they have some drop from Bitcoin. It was from 2.7 million all the way back to around 10,000 Bitcoin, close to 10,000. So Bitcoin did not see much drop in terms of like the asset on centralized exchanges. But when we look at the futures market, which is perpetual market actually, the open interest and BTC term dropped drastically from 280,000. It dropped all the way to 266. That is liquidation, like people getting liquidated. That is the funniest story. Like you could be still investing in Bitcoin, but through paper Bitcoin on leverage and get hurt because some other random hackers stole some other random shitcoins in the market. That is the consequences of trying to outsmart the market by over leveraging. You could see it drop from 98,000 to 95, liquidated, most likely liquidated, or forced people to close their position around almost 20,000, close to 20,000 worth Bitcoin, denominated in Bitcoin worth of contract. That is huge, and that brings us to the report that before all this Bybit thing happened, if you look
By the way, when I hear price dips because a lot of people are getting liquidated, that also sounds like a very temporary, panic-driven price action.
Yeah, so far we can say the sell-off, the force to sell pressure is mostly from the perpetuals or futures market. But if the negative sentiment continue, shadowing the market and affect the market, influence the market, we could expect the tail of this event be sensed in the spot market as well. Some people might sell, and I'll explain after why we are at a decisive mode. If we were on a decisive spot and we were waiting for a catalyst, otherwise a negative macro event would have pushed the price down. That could be possibly this Bybit. I'm not saying it was pre-planned, but it just happened on a bad time. Before all this happened, when you look at the funding rate of all those top assets, they were actually moving to the negative territory already. For meme coins, it was super negative. Solana was getting scary. You could see consistently the funding rate is below the neutral value, which is 0.1, showing people how people are having more appetite to short the asset. For Bitcoin and Ethereum was still positive, but again below the 0.1% that we explained before. That's a neutral level. So for Bitcoin and Ethereum, I can tell it was more like lack of demand to long the market, but not much appetite to short. So some sort of neutrality. But for Solana and meme coin, you could see aggressive shorting, aggressive hedging. All of them are pointing out the liquidity is leaving the market, and there is some uncertainty about the immediate future. There's some fear in the market all the way from early in February or late January. Now Bybit happened. Let's look at the funding rate actually, see how it is. I think it's crazy now after this. So if you look at the top assets funding rate, look, meme coin got even worse. Solana dropped from 0.07 to 0.01, so it got even more decline. And Bitcoin is actually having a little bit positive move in funding rate. That means there's a small appetite to long the market during this dip. Hopefully, this is not high leverage. If it's high leverage degens trying to long the market, I suspect they're gonna hurt. Ethereum as well. You could see the Ethereum. Someone is, I mean, not a specific person, but you could see the market is showing some positive move in the funding rate as well. So Bitcoin, Ethereum, people are buying the dip on leverage possibly, but memes and Solana, especially memes, are getting minced, and you could see they're getting like the liquidity is leaving, and people are trying to short this thing. I don't know what's gonna be the consequence, but all this pointing out liquidity was leaving. The other thing I want to point out, and it was showing some sort of like negative sign, it was the ETF's behavior. This chart, I think we talked about it before, Sina, if you remember. It's just showing the net flow for Ethereum and Bitcoin, but it is normalized by a spot volume. Why is that? It's because you saw a lot of, I think I have some actually tweets about it. If you go back to my Twitter page, I was talking about it before. People were saying, hey, look, market is, that amount of Bitcoin was bought by BlackRock. Look, 3,000 Bitcoin worth 10 million was bought by BlackRock in February. Or the other page was saying 100,000 total IUM of Ethereum by BlackRock. And all of them were pointing out it's a super bullish. And they were not lying about it. Yes, you could see there's some inflow, net flow positive to the ETFs. But why price was not moving up, like all these positive moves? Because the size of all those net flows, when you compare it with the size of the market, it was not significant. That was the problem. So when you want to make it relatively comparable, you have to divide that net flow, positive or negative, divide it by the size of the market and see how effective that could be. Here we are normalizing by a spot volume of each asset. As you can see, the Bitcoin net flow, positive net flow, all the way from early days is up to 8, 9, 10% of the spot volume. That means that net flow, that buy pressure by ETFs could move the needle. The blue line showing Ethereum is really small when you look at the spot volume. That means, yes, those net flows to BlackRock or all those ETFs were true, but it was not big enough to change, to move the needle. Speaking of the recent lack of liquidity or liquidity leaving the market, Ethereum was mostly close to zero. Very small amount. Yes, BlackRock bought some in February, the first week of February, but the rest of the data points showing almost 0% or very close to 0% effect on spot volume or spot market by those ETFs. And Bitcoin were buying by the dip. Look at the 13th, 17th, and 19th. You could see plus 9% of equivalent to 9% of spot volume was inflow, was bought by the ETFs. Yes, we had a huge, crazy amount of outflow. It was February 18th. We had up to 15% of spot volume outflow in that specific day. But in general, Bitcoin ETFs were buying more meaningful, more significant amount of supply compared to Ethereum. And you could see the demand for Ethereum was already low, but it even dropped to lower levels compared to whatever it was in December or early January. That's why, guys. Like that's why that amount of couple of thousand bought by Trump, they call it Trump company. I don't know why. The Liberty, I think it was, or BlackRock. Those numbers are not effective. You have to put it in the context and see how big are those numbers. Yeah.
Yeah.
How do you have any questions so far, Sina?
No, pretty good, pretty good.
Yeah.
Let's move on.
So the question right now, I mean, not right now, actually, the question when we were writing this report, which was a couple of days ago, was, okay, there is some sort of like lack of liquidity or liquidity downfall in the market. What can we do not to predict the price? Because as you know, Sina, and I'm sure you're the same, we are agnostic. We don't know what's going to happen. But we can tell if that price achieved or we get to that price, this is the level of risk in the market. If it doesn't happen, go the other way, this is going to be the risk in the market. So what we can do is we use a statistical model or price model to see statistically if price get to different levels, what would be the consequence? What was the associated risk in the market? The first thing we use, and I use a lot, and I think we use in our shows a lot, is the cost basis of the new investors. We say short term to be scientifically correct. That's coined by Glassnode, but I try to use a simpler name, which sometimes is not correct, but let's call it the new buyers, the new demand. We can look at the last 6-month buyers cost basis, which is the blue line here. Let me look at actually the live version and see how much is it. And why is that important? If you look back, not only last 2 cycles, like you can go all the way back to 2018, the blue line, which is around 92,000 and a half, when the price breaks above the cost basis of these new buyers, the recent buyers that bought in the last 6 months, that is a sign of capital inflow in the market, the positive momentum. They are profitable. When price is above their cost basis, that means whoever were buying in the last 6 months, most of them are on aggregate in profit, and that profitability, if it's persistent, is going to absorb new money. Like okay, oh look, in the last couple of weeks, whatever the new buyers bought, they are in profit. That's going to actually fuel the bull market, that profitability. And as soon as we break below this model or cost basis for I mean, significant amount at the time, that's going to scare that's going to be a indication of the capital is leaving the market. The new buyers are going to get scared because the majority of them are in loss. So this is a great indicator to confirm if we are in a bear market or bull market. But if we solely focus on last 5 years, actually, sorry, let's go all the way back to 20 all the way. The situation we had recently, we actually hit it 91,000, I think, back in early February. We are very close to we have really close or similar situation in the market to what we were experiencing last couple of weeks, and I try to highlight it. Which price hit a new all-time high here, and then in the intern and post all-time high consolidation or post all-time high sell-off. We were in that kind of situation, and I highlighted last 3 similar structure in the market back in 2021, late 2021, March to April 2024. We were living the same structure, a new all-time high, and then dropping to the base level or mid level, and that's a decisive point in the market. Usually we broke down if we get really close and market didn't have no catalyst. But there are cases like here, early stage of bull market, the momentum was so strong, the price stayed above. But let's see, among all these 3 cases, which one is closer? We need more data. But in terms of price performance, yes, we had a new all-time high, and then we entered a post all-time high sell-off or weakness. But we have to narrow down which of these 3 is closer in terms of the structure to current one. And that's all before Bybit.
Can you go back just to add a different, like some more interpretation here? Basically, the assumption of this model is price cannot deviate too much from the realized price of the recent buyers.
Yeah.
Why is that? Because if it deviates too much, it motivates people to either buy or sell. Like if you're in a lot of profit, you will sell. So there's naturally this limit. This is statistical limit on how higher the price can go above the purchase price of the recent buyers. So when you have a significant price jump, that deviation increases, and then that causes downward pressure on the market. It
Yeah.
leads to either a crash or sideways price action.
Yeah. Yeah. And I forgot to tell. Okay, this one standard deviation below the cost basis currently is around 70 something thousand. And if you look back, like just Sina explained it perfectly, it is not a technical model that you do moving average. It's there is a behavioral economy. I mean, I don't know what's the term they use, Sina, in economy. They call behavioral analysis. What that's the term? What is the term they use to look at the human psychology and see what would be their reaction in specific situation? I forgot what was the term they used. So here, literally at the yellow line, the recent buyers at a level of loss that they either got flushed out or they have no incentive to sell. They're seller. It's called seller exhaustion, and that's what happens. Currently, that range is around 71 to 92. If you look at the lower one, that's where the bottom was formed back in July to September 2024, or back in January to almost April 2022. But that being said, we have to look at the mean value, because yes, the mean value could drop, and because it's the standard deviation from the mean value, that line might as well drop. So I'm not saying 71 is the bottom in the market, but there is a high probability that between 71 to 92, if market keep going down, is where the bottom formation is going to happen. But God knows, the Bybit might happen. Who knows? You knew Bybit's going to happen. Tomorrow, another centralized exchange might get hacked, and Bitcoin this time get actually hacked and be sold in the market. So I'm not speculating about 71, but if price entered to below 92, me personally put a high, I mean, probability for this outcome. The market is going to seize the bottom, at least in midterm, between 71 and 92, if we even enter to that range. And like I said, we want to narrow down, because all these three cases, the price got close to mid range, and market was almost after all-time high. But which one is closer? Like, that's what I'm going to answer with thanks to other charts. This chart is showing the concentration of supply or money plus minus 15% of that current price. What we're saying here, we're saying at today's price, at every point in this chart, how much of that capital from total capital in Bitcoin was moved plus minus 15% around this price. Literally the recent buyers, most likely, or the people who are really sensitive to this spot price at the moment. That's the portion of money. When we have an all-time high, or we're rallying to all-time high, because price is moving so fast, this metric is going to drop, because the people who have bought Bitcoin at the elevated price is really low. Like, they're just buying recently. They're not too many people. So that drop is because market is moving too fast, and at this price, for example, not much supply have moved or been purchased in that price. That's why you don't see the capital around this price point is around 10%, or even less than 10%. Actually, it's 6 or 5%. But after seeing the all-time high in the market, or reaching to all-time high, after we enter the post all-time high, this metric start to rise. Why? Because we're entering that consolidation range. Price is going sideways, and new buyers are coming in. We are in the same price range, and the new supply bought by new people is going to rise. So that's why the amount of capital moved around that price point is going to rise. That's concentration of capital after seeing a all-time high and entering a consolidation. The same thing happened here. Market moved fast. This metric dropped and going up. If we go look at the previous four examples that we were talking about here, this one is not very similar to what we see here. If you go back, why? Because we didn't see much drop in the second rally in 2021. But right now, look, the drop we saw before the rally in December after the election. So this is very close to the other two cases. Before we reached to that all-time high, we had a huge surprise in the market. A lot of supply was bought in the consolidation before, and then price moved really fast. Now we are entering to the consolidation post all-time high. So this example is ruled out because this one was mostly future market driven rally. There was not much supply moving on chain while the price was going up. So this recent decline to the midline is not close to that. We have two cases. We have to even narrow down more after looking at the other chart. The other chart that I really like is the total amount of capital owned by the new buyers, or how top heavy the market is, or how much the price sensitive, how many of the coins are owned by the price sensitive paper hand, most likely investors. I'm not saying all of them are going to be selling, but the majority of them bought in the recent rally. If you look back, the jump in the new buyers supply or short-term holder supply is so significant that makes the 2020 2021 case very similar to what we were experiencing recently. So it's not very similar to this one. This one we had a spike, but the spike now compared to the base is very, very similar to what we saw in 2021. And I gotta say, I'm not saying we're gonna see a 50% drop in the market, but structurally, we are in a situation that we had a good rally. We are entering the post all-time high consolidation. The number of coins owned by the people who bought in this rally, and most likely we are getting close to their cost basis or possibly below their cost basis, they have a lot of coin. So the sell side, in case of any market correction or further correction, is potentially high compared to what we have here. It's very similar to that. But I'm not saying the price reaction or price drop is going to be like what we had in 2021, because we had ETFs. The mechanics have changed a lot. If I want to be speculative and be directional, which is I don't used to, but I mean friend to friend, if I want to say it, I think we're going to have those patient buyers that stepped in back in July or something in 2024. They were not rushing to buy the dip. When the price got to their favorite number or the right price from their perspective, they had enough capital to buy it. So in my opinion, between 71 to 92 is a very good range for those patient buyers to slowly wait for the price and start to deploy the capital. But who knows? Maybe another big exchange, just something happened in exchanges and price even go lower. But based on what I saw recently, the resilience in Bitcoin, the way they start to buy in bear market, I suspect the time component of the bear market is what the Bitcoin holders are going to deal with, not the price component. Versus Ethereum and other shitcoins, that they have to deal with both time and price, and also existential. It could be the case could be like 99%. The devs are going to leave the project and poof, all are going to go off the order books. So it's really scary.
So one difference I see with the first example in 2021 is if you just look at that period, the price went from the bottom of the COVID crash, which was 4,000, right?
Around 4,000. Yeah.
4,000?
Yeah.
All the way to 67,000, right?
Yeah.
So that's 15 times, I guess, appreciation in a matter of a year.
Yeah.
Right. So that was really fast. But this time, since January 23, which were where we when we were at 16,000, to today, it's been 2 years. Right. So it's been half the speed in terms of growth, and it's been very methodical, slowly increasing. Plus, a lot of that new buyers are now institutions.
Yeah.
A lot of them are now ETF investors. So it's been much slower, much less FOMO driven, but also the combination mixture is different. So yeah, it looks definitely a lot better than that example.
Yeah. That's what I'm saying. I suspect the time component is going to be the painful part of the upcoming bear market, if we have a bear market,
Mm-hmm.
is like people like institution or whoever were buying here all the way from March or April of 2024 to September. If they're gonna repeat their behavior, they're not gonna go and pay the premium and split and just hit the buy bottom. No, they're gonna deploy like a similar to DCA at correct undervalued price. They're gonna wait. They're patient, but they have a lot of capital. I suspect we're gonna see if we break below 92, like I said, if we break below 92 more than a couple of days, I suspect we see something similar like this. And I would be personally, it's like more a hope, not a prediction, to see the 71 one standard deviation. Because I have this joke with my friends. I have a constant DCA as far as we are below that red line, which is one standard deviation above. I keep my DCA. I don't care. I have a weekly, monthly, small amount of money I put aside to buy Bitcoin. But when we break below the cost basis of the short-term holder, if I had like a laptop in my buy list, I just give up that. I put some money in Bitcoin in chunks. If we break below or close to the yellow line, I enter a mood called kidney mode. We put the kidney on the market, sell it, buy Bitcoin, and when Bitcoin back, we buy 2 new kidneys or possibly 3.
Uber until 12 p.m.
Yes,
12 a.m.
yes. So that's the kidney level. Like the market is so undervalued based on this model, which I believe in, that it makes sense to actually. I'm not suggesting, but I mean personally, I call it super low risk when we get close. And I hope we get to 70 something, and that's a gift for whoever is believing in this asset.
Yeah, yeah. Well, whatever happens is good. If it crashes, it's a temporary discount. If it goes up, of course, everyone's going to be happier. So if you have, that's the advantage of owning an asset that is going. It has strong fundamentals, and it's on its way to becoming the basis of the global monetary system. It has bright future. Whatever happens is temporary, actually. So if it goes up, your thesis is panning out. If it goes down, it's a buy opportunity, and it's going to recover fast. You pretty soon reach a place where you really don't care. Either way, is fine.
Yeah, I agree. And Sina, I didn't notice even the stock market was red today. So all of this are affecting the market in a bad way. And God, the timing, like that hacker must have.
But that's good. I mean, if it takes a TradFi crash and the biggest hack in the history and all that to crash Bitcoin, not even crash, like to correct Bitcoin for 5%, then imagine how much buy pressure exists below the price. So
True.
It's actually pretty good,
Yeah.
We haven't had any significant correction, like nothing really big. It's kind of like Bitcoin either pauses or goes up. It's pretty interesting price action that we are seeing this cycle.
Yeah, actually, people who are interested, if you go back into, I think it was 2 weeks ago or 3 weeks ago, getting back to your point, look, this is the drawdown this cycle.
Mm-hmm.
So the drawdowns is because this is the Fibonacci levels, like 23%, 38, 50, 61. Sorry, 61. The first one, I think it was around 10%. You could see we barely saw plus 23% correction in this cycle. But look at the previous cycle. The current cycle was really similar to 2016 to 2018, which surprise, was a spot driven. By then, you could go deploy fiat, and there was not much stablecoin. There were not much ICOs then, not much shitcoins. So the capital was, and there was not much perpetual or all these crazy tools now. But right now, when you look back, it's very similar to 2016, a very spot-driven, low downward volatility, as opposed to 2020 or 2012 market. And the funny thing was, when we were writing that report, we were predicting this is an inflection point when, if a catalyst or bull market, a catalyst hit the market and the bull market keep continue, we were expecting the second leg of that euphoria, which I'm not sure what's going to happen. It could be totally different. We're going to have just probably one slow, long term. I'm not going to call it bull market, but long term price appreciation with a temporary pause. That could be the potential. And that 4-year cycle was already broken by having an all-time before the halving. I'm just tired of discussing that with people. That 4-year cycle is already gone. But yeah, to your point, you're right. Like the drawdown were really small and really, it looks like the market is maturing thanks to ETFs and all these assets. You can do option on ETFs now. So look at the layers, the economical layers has been built on this asset, and it's fascinating. Okay, I think Sina just got. Oh, you're still there, Sina, or you got dropped off?
No, I'm here.
Yeah, yeah,
Why it's getting really dark here. So
yeah. Look at this one. I don't know if it's real or it's funny. This it said North Korea just announced 1.5 billion strategic Ethereum reserve for the.
let me switch to your screen.
It's so funny. I love this tweet.
Well, yeah. Well.
So we were hoping for Trump to put a strategic reserve for Bitcoin and all these shitcoins. Now turned out there are some rumors that the hackers were attributed to North Korea. But yeah, I love this title. North Korea just announced 1.5 billion strategic Ethereum. It's so nice.
I have another joke too. Let's look at this one. This is. I don't think it's a joke. I think it's a serious guy. He said, "Finally got FTX payout." FTX is paying the.
Oh yeah.
The people, yeah. It's been a long 2.5 years, but glad to have the money back. Just deposited into Bybit. What are we longing? And he posted this morning.
Oh my God! It's this morning.
Before the hack, right? So
oh my God. Oh no, poor Taiki. I cannot pronounce the name. I'm sorry, man. I'm sorry.
And then one of the comments are like, before you think of longing anything, wait another 2.5 years to get it back.
Oh God, it's sad. I feel bad laughing, but it's just a poor thing. Oh my God.
I don't think he's joking. Yeah. Anyways, well, thanks a lot. We probably looked at 20 different things in the market today. Thanks a lot for all the discussion, all the great analysis you brought for us, and essentially you summarize, I think, 2 of the main Glassnode reports that you had out. We also looked at the hack and some of the recent price action and the status of the short-term buyers and price levels, and if we crash, what are the likely levels, and some of the positive and negative things that are in the market. We'll keep watching these metrics, and most Fridays we're gonna come online and discuss content. Sometimes one of us is just busy and we can't do this, but whenever there is a really important event happening, we sure will be there and watching the market. So make sure you keep in touch, send us your comments and thoughts, and engage with us on whatever social platform you see us. Follow Crypto Wizard. You can also find my account, Sina under 21st. Crypto Wizard is that's the same handle, right? Crypto Wizard.
Yeah. Everywhere go with Crypto Wizard.
Yeah, on Twitter, and just start conversation. We'd love to chat online. Send us comments and your thoughts, and we'll see you next week.
See you, everyone. See you, one. Be safe. Buy DCA Bitcoin. Don't go DJing on these shitcoins.
Great advice. All right. See you later, guys.
See you. Bye.